Okay, Assalamualaikum and very good morning. Um, I'm preparing this video for uh, the synchronous class on Thursday. Okay, so I'm going to explain a bit about the adjusting entries. Right, we have learned in uh, the previous week that uh, we have to enter transactions into journal entries. Okay, so the first journal entry into book is through journal. Okay, then after journal we have to transfer the account to the account. Right, we have done the all the transaction. Okay, identify accounts that involve whether it's increase or decrease. Okay, whether it's assets, liability, or owner equity. Right, and we go to the extent that we post all transaction into the accounts. At the end of the month or at the end of the period, we close the book. Okay, and we print all the balance. We calculate all the balance. Okay, for example, cash accounts, we should have debit balance. Okay, and we bring all the accounts into trial balance. We have done that in the previous class. Okay, so today we proceed with the adjusting entries. Okay, there are some concepts that we need to understand. Okay, we have learned about the accounting period concept. Okay, normally accounting period covers the 12th month. Okay, so we have to match the revenue against the expenses and will be reported in the proper period. Okay, so whatever adjustment we did during the previous class for specific reason, okay, that is to account the expenses against the revenue for the specific period. Right. We also learned from the previous class that under accrual basis, revenues are reported in the statement of profit and loss in the period they are earned. Okay, right. Next, for example, services provided to customer. Okay, once we deliver or provide services to customer, we have to record the revenue even though no payment is made. Okay, so whenever we complete the services, we have to record revenue. Okay, if there is no payment from customer yet, so we have to record debit accounts receivable and credit fees earned. Okay, right, if you receive cash, so we have to record debit cash or debit bank, credit fees earned. Right, revenue is measured as assets received. Okay, for example, accounts receivable or cash in exchange of services. Right. So under accrual accounting, revenues are recognized when services are performed or product have been delivered to customer. So which principle that we complied with? Okay, so which principle? Okay, it's a matching principle. The accounting concept supporting reporting revenues and related expenses in secret is called matching concept. Okay. Under cash basis, we only report cash received and cash paid. Okay. Right. Under cash basis, but we have learned through accrual basis that every revenue, whether it involves cash or not, will be recorded. Okay. So on the accrual basis, some of the accounts need update at the end of the accounting period. Okay. For example, expenses are not recorded daily. So some expenses we consume the benefit. We only receive the bills or the invoice at the end of the month. Okay. So we have to record the expenses once we receive the bills or receive the invoice. Okay, some revenues and expenses are incurred as time passes rather than as separate transaction. For example, we use assets. Okay, as we use the assets, there will be some depreciation expense that we have to calculate and we have to record in our book. Okay. Some revenues and expenses may be unrecorded. Right? So as we perform our services to customer, okay, we have to record once we completed the or we delivered the service to customer, right? So normally all these things will take place at the end of the month. So at the end of the month, we have to prepare the journal on adjusting entries. Okay. Right. Let's see the exercise here. Okay. A, cash. Normally we don't do any adjustment on cash because as we pay or as we receive money, we will record. Okay. Prepaid rent. Okay. So we pay rent in advance. So at the end of the month, we have to do this. Right? Okay. C, wages expense. Okay. We consume or we need staff. Okay. We need people who work in the company to serve for the company, and we don't pay on daily basis, we pay on monthly basis. So normally at the end of the month we will prepare the wages. Okay, so we will have to record the latest expense at the end of the month. Yes, we have to prepare the adjusting price. Land, no. Accounts receivable, of course, yes. Unearned rent. Still remember the last class we learned about unearned rent. Unearned rent is where you pay rent in advance or you receive a rent in advance. Okay, so the example is when your tenant, person who rent your building, okay, they pay advance amount of rent. So when you receive the money, you cannot record as revenue yet. It is what we label or we record as unearned rent. Okay, it is a liability. Okay, so unearned rent, yes. Okay, once again, prepaid expense, you have to prepare adjusting increase. Unearned revenue, you have to prepare adjusting increase. Yes. Accrued revenue, that you haven't received any payment yet, so you have to do the adjusting increase. And finally, accrued expense, that things that we haven't covered. This is the last one, accrued expense. Okay, expenses that you haven't recorded. Okay, yes, you have to do the adjusting increase. Okay, I will continue with the next video.